Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, January 27th, 2023. So we're going to make this one light and breezy for the good folks on the YouTubes because next Wednesday, starts with a W, next Wednesday you have he's probably not an octogenarian, but it sounds funnier. You're going to have an octogenarian make a decision that will affect the next couple of months. Now, you also have earnings after that. You're going to have Apple and Amazon and Google, I believe, all on the same day on Thursday. So lots of volatility catalyst, certainly, to start February. But there's this kind of point of view. On one hand, you have walls of worry, which would certainly you have plenty of them next week. You have the Great Wall of China wall of worry. But then the technicals, and that's what I'll focus on in this video with you, have never looked better to actually break out. So I want to give you kind of a target. I want to give you kind of both sides of the coin, and I want to give you the odds that I have, at least in my head, in terms of what happens next. So let's cover the charts, and we're just going to focus on SPX today, and then we'll kind of round back and talk about how to control risk and what that means going forward. So let's dive into SPX here. And there's a lot of things here that are positive, guys. One thing that I told the folks in the gold room is that if this is a major tradable bottom, now you guys know my opinion on the YouTubes, right? My last video 2 weeks ago was said up first, Mad Max next, right? So I think there's something coming down the line that will surprise everyone. It's not something you can see right now. That will surprise everyone and leg sweep the market, right? So it's important to kind of keep that in the back of the mind, right? And I've laid out my reasons as to why, and I have not changed on that because I have no reason to. The reasons that I laid out are still active. But in the short term, from a trading perspective, which is what we care about, how do you make money today? You make money today based on the chart that's in front of you, right? And the chart that's in front of me right here has never looked better to make an actual lasting strong, an actual tradable and likely significant bottom. So let's talk about a couple things here that I'm noticing. I have the red line here, which is the daily 200, and I have the blue line here, which is the daily 50. And I'm just going to trace both in so you can kind of quickly visually see where they are. So do you see how the distance here between the red line and the blue line was quite large? When you have a distance of that size and the red line, the 200, is on top of the blue line, it makes it very, very difficult to turn the market around, right? And so what you want to see is this distance here between the moving averages start to narrow, right? So as I keep drawing this in, you'll start to see right about here, entering, December into this year. You see how narrow the distance has become between the red line and the blue line? Unlike here on this rally, or unlike here on this rally, the distance is very small. And if we zoom in, you can see the distance is almost non-existent here. So that's point number one. Point number two, from just basic stuff here that's really powerful, from a moving average point of view, the 21, the green line, has crossed through the 200. That did not even come close to happening here, or frankly even here, right? So a major hat tip for the bulls. So you've narrowed your moat, right? Very, very narrow distance there. All your moving averages are now basically congregated on, right around 39.50. So this can act as kind of a trampoline, right? Because when you get all your moving averages in the same spot and then price gets above it, what can happen here very often, and what we will likely see if Powell blesses this thing, is you get a big burst higher, and that drags this green line through the rest, and then this creates kind of the stacked moving averages that we associate with a trend. So that is in play. One thing I want you to note, I don't think we get above 4100 in front of Fed, right? There's just frankly no reason to do that. This is the top of the resistance box. It's very obvious, right? You can see the resistance box all through here. We closed at the top end of the resistance box today. We almost got to 4,100, but I don't see any reason that we would break 4,100 before February 1st. So in the room, we do have some 4,100 flies, but they expire January 31st. So ideally, we end the month exactly at 4,100, and then from there we can see what's up. If you look at the weekly chart, this is the first weekly close above the weekly 50 in quite some time. So that is generally positive. You have an up thrust arrow here, and you have a upward squeeze here, right? So again, I'm just kind of laying out all of the multitude of technical reasons that this looks like an actual bottom. This more so than it has in the past 12 to 18 months. Going back to the daily chart, you see that beautiful turn of the red line here? How it's turned from red to magenta? Some would say hot pink. That's pretty significant, guys. That hasn't happened before. So again, that's all very, very strong signals, actually. Pretty strong signals when you put it all together. If it was just one of these signals, if I just had a weekly squeeze with an upward bias, but I didn't have all of this other stuff, it wouldn't be worth as much. If I just had this white arrow and nothing else, it wouldn't be worth as much. If I just had this bow tie of the moving averages that can cause a launch pad type of trampoline setup, it wouldn't be worth as much. And if I only had this first positive crossover in over a year on the SPX, it wouldn't be worth as much. But when you put all the pieces together, it is worth quite a bit. And then, although I won't show to you today, the dollar, has broken lower, and that hadn't been the case for any previous rally. Bonds have stabilized, etc., etc., etc. So that kind of gives you the bull case, right? And I think it's extremely robust. I'm going into Powell. What my plan is going into Powell is I'm going to flatten out by January 31st at the close, ideally at 4,100, and everybody in the room goes to Chili's. And then from February 1st until the end of the week, so just from Wednesday to Friday, I'm going to be day trading because there's going to be tons of volatility, I expect. And I want to be able to be flat and nimble to attack that volatility from both sides, whatever direction it goes. I want to be completely agnostic to the direction. And the only way to be agnostic is to be flat. Going into the event, again, I'll reiterate, I think the probability that we go higher from here is 65-35. So 2 out of 3 times I think Powell will bless this thing. Let's talk about the 1 out of 3 times that he probably will not bless it. Because if anything's going to wreck this market, it will be Powell. I don't think it will be earnings. I don't think earnings matters. I think the only thing that matters in this market is what is the price of money and what is the Fed doing. So if anything can wreck this setup, it is Powell. So let's talk about the 1/3 of the time that will happen. At least roughly estimated from my best odds making abilities. So in the event that we go into Powell at 4,100 here, and he does not bless this market, then what you will need to see hold is 39.50. If you give back 39.50, then I think we have to start talking about much, much lower. If Powell does not bless the market on Wednesday, then I don't think this will sell off gently. I think it will be a vicious and hard sell-off, right? Now again, I have to reiterate, because I just said some pretty strong adjectives, I don't give that the higher probability. I think in 2 out of 3 scenarios, the market will follow the technicals and we go higher. But it is imperative that you appreciate and know your risk, and the way that you control for that risk going into Powell is with your size. So as long as you control your size and your risk, then play ball. So what else did we miss? One last thing here, and assuming Powell blesses the market, I'll give you what has been a kind of a long-term target that I've been giving out, and I've mentioned it a few times, and it's certainly taken a long time to get there, right? I think I started mentioning it somewhere around here, and that was 3 months ago or something. But the target remains the same, 4180 SPX. So that is what is in play for the bulls. The level that the bears want to take out, 39.50 on SPX. If they take out that level, they'll retake control. And again, just to make sure that everybody's on the same page. Going into Powell, what my plan will be to be flat, because that's what makes sense to my trading ability and my trading skills, right? I don't mind day trading at all. I actually prefer it for high volatility binary events. If you force me to take a position going into Powell, I would have to be long, because the charts are all telling us the same thing. But just again, recognize the risk. if when something looks perfect, if it doesn't play out as it's set up to play out, then you get kind of a snapback rubber band type of effect, and you'll get the opposite playing out in quite a vicious way. So mind your risk, have your plan ready. I think focusing on tech still remains the best option. Last week I told you that I was looking at Shopify and semiconductors, and you can go and see what the week that semiconductors and Shopify had. So I still think that's the play if Powell blesses the market. And that's it. So get ready for the Super Bowl next week, at least for traders. It shan't be dull. Have a plan, and have fun with it, because there'll be plenty of opportunities all over the market. All right, guys. See you for the next video. Cheers.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me